The week's end top stories at NBR, no end in sight to booming New Zealand mergers and acquisitions activity, unintended consequences for banks and borrowers, the Booster Innovation Fund, and there's more coming right up. Kia ora and welcome to NBR This Week, 100% subscriber funded and proudly brought to you by you, as is every story at nbr.co.nz. Friday's top business stories coming up, and then a look back over the week's top stories from our daily video business news bulletin, NBR Today. It's Friday, March the 4th. I'm Paul Brennan. Thanks for joining us. An initiative that invites New Zealand companies to publicly declare their gender and ethnic pay gaps is about to kick off next week, with 50 medium to large employers signed up and the hopes of a further 50 to 100 companies to join by the 50th anniversary of the Equal Pay Act, October 20th, 2022. Mind the Gap is a voluntary initiative that seeks to use peer pressure to get companies signed on with full public disclosures about their gender and ethnic pay gaps. The warehouse chief HR officer, Richard Parker, is one that had signed up to Mind the Gap in the wake of the company slowly but surely moving towards more pay transparency over a few years. He joined the NBR's Dita Daboni.
There is a gap that in these particular groupings of our employees, and that we're now comfortable putting that out publicly and not just internally. And we've got a whole lot of initiatives where we are trying to continue to close that gap.
Warehouse Chief HR Officer Richard Parker with Dita Daboni there. PwC sees no end in sight to booming New Zealand mergers and acquisitions activity after deal volumes rose a staggering 376% in 2021, even with headwinds such as rising interest rates taking hold. And NZX-listed companies are increasingly being circled by large funds as potential takeover targets, PwC partner Wayne Munn said, and he joined the NBR's Hamish McNicol.
I think what it does reflect is a bit of latency in those previous years where deals were taking longer to progress, or maybe some of those deals had stalled but were really reigniting over the last couple of months. So, again, what really stands out is just the size and extent of that activity in the last 3 months.
PwC partner Wayne Munn with Hamish McNicol. The National Party is worried that the most recent figures confirm new lending regulations are having unintended consequences for banks and borrowers. National's Commerce and Consumer Affairs spokesperson Andrew Bailey said that had not been the intention of the Credit Contracts and Consumer Finance Act. Instead, it had meant to help clamp down on irresponsible lending by high-cost lenders. Andrew Bailey joined NBR political editor Brent Edwards.
There's a whole lot of evidence. I've been talking to a number of banks, and even they acknowledge that because of the rigour that is now required to go through, people who would otherwise have got loans, they quoted that approximately about 5% of mortgage applicants have now been turned down because of the new rules, and in terms of credit cards, it's about 15%. So we've just seen that very quickly happen over the last couple of months.
National's Commerce and Consumer Affairs spokesperson Andrew Bailey with Brent Edwards there. Listed on the NZX Wednesday, the Booster Innovation Fund is a fledgling venture focused on investing in fledgling ventures. It's an investment option previously missing from the NZX, so the fund's arrival is a welcome development. If it weren't for the funny bits, it manages more than $5 billion of New Zealanders' money, of which $3.1 billion is in its KiwiSaver scheme, so it has the scale and capability to create a sophisticated offering. However, Booster has instead created a fund with baked-in conflicts of interest and an unnecessarily obscure structure. Find out more in Tim Hunter's Hunter's Corner column at nbr.co.nz right now. Along with the full details of those stories and more, I'm Paul Brennan. This is NBR This Week. A look back now at the week's top NBR business stories from our daily business news bulletin, NBR Today. From Monday, Restaurant Brands hit $1 billion in sales. Restaurant Brands has declared an interim dividend for the first time since 2018 after hitting its $1 billion sales target in the 2021 financial year ending December 31st. Restaurant Brands CEO Russell Creedy said New Zealand had taken a bit of a COVID-related hit in sales, particularly during the first lockdown, but the overall health of the company was good. The NZX-listed group operates a mix of KFC, Pizza Hut, Target Taco Bell and Carl's Jr. stores across New Zealand, Australia, Hawaii and California. Total sales of nearly $1.07 billion in the year for the group was up 19.7% from the previous full year 2020 result, while net profit after tax was up 69.3% to $51.9 million from $30.6 million. It's NBR This Week, the week's top 5 business stories from NBR's daily video news bulletin, NBR Today. From Tuesday, CFD provider censured. CFD provider CTRL Investments has been censured by the Financial Markets Authority for breaching its derivatives issuer licence. The company, previously known as Mahi FX, offers contracts for difference, giving traders exposure to assets including currencies, commodities and shares. In a statement, the FMA said CTRL had materially contravened 2 standard conditions of its licence by failing to comply with requirements for outsourcing arrangements and allowing clients who did not understand the risks of derivatives to trade. CTRL was screening retail investors for their understanding of derivatives. However, in some circumstances, if a client could not demonstrate the necessary skills and knowledge, CTRL merely provided a warning statement and suggested the client not continue, FMA Director of Supervision James Grigg said. It's NBR This Week, the week's top business stories from NBR's daily video business news bulletin, NBR Today. From Wednesday, the weaknesses or strengths of PPPs. The Infrastructure Commission, Te Waihanga, has confirmed it's starting its final review of the troubled Transmission Gully project, but it says it will not be finalised until after the road opens. At Parliament's Finance and Expenditure Select Committee, Infrastructure Commission Chair Dr Alan Bollard and Chief Executive Ross Copland were asked about the effectiveness of public-private partnerships, PPPs, in the context of the ongoing delays in the opening of Transmission Gully. The project has been beset by difficulties, experiencing both long delays and cost overruns. Copland told the Finance and Expenditure Committee today, Wednesday, that a final review of the project had begun and it would look at what extent the PPP had contributed to the problems. It's NBR This Week, the week's top business stories from NBR Today. From Thursday, receivers appointed to company behind Fiji resort. Soured relationships and border closures have tipped the New Zealand company behind the 5-star Six Senses resort on Fiji's Malolo Island into receivership. Receivers from the Sydney office of FTI Consulting were first appointed to Island Grace Fiji Limited, IGF, by majority owner and financier Secatur Hotels on December 23rd. It's also in voluntary administration. Secatur Hotels is backed by Australian businessman Gordon Fell, known for his involvement in Rubicon Asset Management and the collapse of Alco Finance Group in 2008. The first receivers report said the resort, which began construction in 2015 and opened in 2018 after a prolonged construction period, incurred losses in its ramp-up phase and had been closed since March 2020 and is maintained on a care and maintenance basis. This is NBR This Week. Now we're up to Friday's top story. New Zealand would be in for a rude shock if the building materials supply shortage fixed itself overnight, says an infrastructure firm partner, warning of further bottlenecks. In December, EBOS released a survey of 219 residential and commercial construction product suppliers across all main categories. EBOS found 82% were having problems supplying the market, up from 79% in the previous quarter, and forecast the cost of building supplies would keep rising into 2022. Project advisory firm Frequency's managing partner, Tim Palin, says the company had seen material shortages across timber, steel and nails in recent times. You won't believe it, but a lack of light bulbs just about held up a job for us on one of our contracts not long ago, he said. The full details of those stories and more are at nbr.co.nz right now. This weekend at NBR, In Fact or Fiction on Saturday, Brent Edwards and Grant Walker debate the week in politics, while in his weekly book review on Sunday, Neville Gibson looks at Anne Applebaum's Between East and West, describing Ukraine. I'm Paul Brennan. Thanks for watching and listening to NBR This Week. Have a great weekend. And join me again from Monday around lunchtime for the morning's NBR trending stories, then again from 5:30 for another NBR Today.